Hi guys, thanks for tuning in to another episode of Nuggets News or Trader Talk with our friend Charting Man Dan. It's been a while, Dan, so how have you been?
Good, my man. How are
I'm
you?
pretty good. Not getting enough sleep with the little one, but I know you've been busy as well setting up the new place, so how's that all going?
Oh, it's good. Just settling in, getting ready for the winter and some hibernation mode, and then we'll hit the spring hard with planting a whole bunch of crops.
Fantastic. So, look, today I want to talk about a few of the different sectors and the way that money rotates in and out of those. And to start off with, let's maybe start with the startups. And we've seen some huge valuations in things like WeWork, Uber, and Lyft. So, how have you seen that sector change in the last couple of years? Because I know it's way more prominent in the US than Australia.
Well, there's definitely a scenario where you get a lot of euphoria because you get an IPO that doesn't have previous price history. You can't short it in the first period that it begins trading. And then it's just hype. It's hype and hype. And we know how that works. And so it reminds me a lot of the cryptocurrency space. I mean, I've seen it on so many names, whether it's GoPro a few years ago or BYND Beyond,
Yes.
that alternative meat company. And it's just the kind of thing where people who don't know what they're doing and don't know how the game is played get burned in a big way. And those who do know how it's played can take advantage of that. So, what I do to protect against that is I really just disassociate a physical, actual company from the price action. And that allows me to just be in and out. I don't care if BYND is valued at $800 billion, as long as I'm just sticking to my stop levels and sticking to my price levels. I'll ride the hype. I'll get out before the pullback. But there's so many people that don't know how to do that, and that's where they get burned.
And the similarities between even the ICO space, which regulators crack down on, but yet in the IPO world, we have a similar situation where accredited investors get these really good prices and then they go through the hype cycle and whatnot. They pay for advertising, then it hits the public markets, and lately it's been crashing. So it's actually very similar in that regard, isn't it?
Oh yeah, it's extremely hypocritical. And you have the recent WeWork fiasco where they were gonna, I don't even know the numbers off the top of my head, but they were gonna list at this valuation, which was insane, and then it started to get dropped down, and then eventually they're just not listing the IPO anymore. And the takeaway from that is someone, Josh Brown on CNBC, our financial news network, he pointed out that they were this close to pushing that through at that valuation, which would have crushed retail investors.
Downtown Josh Brown. He's worth a follow on Twitter as well, guys.
Exactly.
Yeah, it's so interesting to watch that unfold. And I think it's going to change the way we're already seeing it with the STO world to tie it back to crypto, that some companies might stay private and start to get, everyday investors might be able to get involved in this space, and it might take out that hype cycle of going public and whatnot. So, yeah, I'm really looking forward to that changing. But the next sector I wanted to talk about was, I guess, the general difference between, and as a trader, this is interesting to hear about as well, how people rotate from one to the other depending on what is going on. So for people that aren't familiar, Dan, maybe describe, defensive sectors and when people go into them.
So the utility sector is definitely one of the defensive sectors. We got precious metals that act as a bit of a safe haven in fearful markets, and there is also the discretionary things that people are going to continue buying regardless of what the overall economy is doing. So whether it's maybe beer or whether it's food or whatever it is, these are places that people look to move their money in times of fear, and they're often times that places that people look for clues. So if the market is strong and I look and see, okay, well, gold's creeping up as well, that can tell me, well, maybe some people are hedging against the strong market just in case things do pull back. So there are little things that you can pick up, and sector rotations are always going on. Just right off the top of my head, 2 days ago, Friday, 2 trading days ago, Friday, we had a big drop in the tech sector and the semiconductor sector, and the financial sector stayed really strong. So that just shows me money's leaving this sector and it's going into this sector. And it's just this game of musical chairs when the market's in an uptrend and we're seeing one sector pull back and the other one goes up, and they're just taking turns and really just tag team bulls is how I view it. But we're seeing a lot of that going on. And as soon as we start to see weakness in the S&P 500, these safe haven defensive sectors will start to see further strength. And they've already been strong, as is the utilities have been strong all 2019.
Yeah, so just even for people at home to simplify that even further, people are always going to buy their toilet paper, they're going to pay their utility bills. So it's kind of like the only steady income that investors see when they're getting really defensive, versus if everyone's feeling wealthy and there's lots of jobs and we're getting wage increases, then people are more likely to spend on all sorts of things. And that's when we tend to see the most money go into things like tech and more speculative asset classes. And it's definitely been a big driver, I think, of Bitcoin. So lately, for a few of those reasons, as well as the US dollar, which we'll get to, I think Bitcoin is starting to play a little bit like a mature asset, where it depends on what's going on in the macro environment and how much loose monetary policy and speculative money is available. So would you agree with all that?
Yeah, it's very interesting because Bitcoin, at times, very brief periods of time, we have seen it act as a bit inverse to the S&P 500. There was a very specific time that I'm talking about. It did not last long at all. But then, like you say, if we have everything all sunshine and rainbows and the markets are healthy and I have extra capital lying around, well, where am I going to put this? Might as well put some in a very speculative asset that could potentially make me a bunch of money. And if I lose it, no big deal. My other assets are holding on just fine. So it's been a very interesting scenario where Bitcoin has been on both sides of that coin, and it hasn't really found a home. It hasn't found a place where we can point to it and say, this is where it consistently is as far as correlations to broader economic markets or activity, and wondering when that home will be found eventually. But just as it continues to mature, it continues to change.
Yeah, definitely an evolving asset. So we've spoken about gold a lot and Bitcoin a lot and all the different use cases and how that fits in. But I guess the other two big defensives are bonds and the US dollar. So traditionally, you could rotate into a bond and maybe get a nice 5% or 7% yield. And it's ridiculous to think these days that people weren't happy with that. That was the fallback option, to only get 5 or 7% a year. And those investors have got to compound those returns, and they've done very well. But now we've got negative yielding bonds. So do you see, how do you see this playing out, Dan, with people rotating into that for safety, even though it's got negative yields? Once everyone wants to sell, is this going to get messy?
Yeah, well, right now I'm watching the dollar specifically more than bonds. And to be completely honest, bonds is an area that when I do have free time, that's a place, I'd say that's my weak point as far as, a trader and my broader economic understanding of macroeconomics. So I don't have a whole bunch of knowledge on bonds itself, and I do need to learn more about it as I am looking for more passive gains out there. But as far as the dollar is concerned, I'm very interested in the dollar because of its inverse relationship with commodities, its impact on gold and the miners. So watching the dollar lose its daily uptrend recently, we just lost the weekly uptrend, which had been intact for 4 months. And now we're watching the monthly uptrend, which has been intact for 20 months. And if that gets broken, I do think that that's going to be a further indication that gold could potentially look to set its monthly high or low and potentially see some continuation of its recent bull move.
Yeah, and interesting you say that because in that time Bitcoin has been going down as the US dollar has been strengthening, and it was the other way around in 2017 during that bull cycle. So it definitely depends. And if the US dollar loses, let's say 30% in strength, that's almost a guaranteed 30% gain in Bitcoin in US dollar terms, and that's kind of the price that everyone is just fixated on. So the US dollar is definitely that safe haven at the moment, and a lot of other currencies are weakening. Do you see longer term, worries on the horizon when people talk about the US dollar debt and unfunded liabilities, and everyone just takes it for granted that it's a sure bet?
Everybody takes it for granted. You definitely have that right. And myself included. And I did that recent video where I talked about, what is my plan if it hits the fan? And I do point out that, a lot of what I am relying on is dollar strength, but you better believe that I have a lot of dollars allocated just sitting and waiting for cryptocurrency if I do have to escape the dollar. So people take it for granted. And if we do lose the monthly uptrend, we might see a bit of fear in the strength of the dollar. But for people that are prepared for it, that's a time where cryptocurrency could shine, because as a crypto trader, I've been moving in and out of US dollars, and that will not be as comfortable if we are not seeing the dollar strength that we are used to.
Yeah, that's something that I've been trying to educate people on, is even if you're not going to do it right now, as you say, get educated and have a plan on if these currency wars really heat up, and even if Australia has to start QE and it looks like the Aussie dollar is going to continue to go down for the next few years, have a plan on how you're going to rotate into gold or rotate into Bitcoin, a stable coin, something like that. And yeah, I definitely think longer term, that's why I'm so bullish on these sort of assets, because I see all fiat currencies are going to have to lose their purchasing power if they fund those liabilities.
Absolutely. It's certainly going to be interesting as it plays out. But again, the main takeaway is have a trading or not even a trading, have a life game plan and be able to quickly adapt to the changing environment, because when it changes, the last thing we want to be is a deer in the headlights that is frozen and doesn't know what to do. And if we have a game plan where I can say, okay, if the monthly uptrend is lost on the dollar, I will allocate this percent of my net worth to Bitcoin, just very clear, clean, if-then scenarios, and that will keep us prepared in most situations.
Yeah, and I'll probably going to dedicate a whole video to this as well, but so many people are just unaware what they're invested in with their super, and then they look at it and they're in Australian property and aggressive shares, and they've got no defensive assets. And yeah, just having a plan on what you're even retired in, or knowing how to switch your super, because super's not compulsory in the US, is it? The retirement fund.
No, and that's the first time I've heard the term super. To be
is it IRA? Is that what it's called in the US?
Yes. Yes. So yeah, we've got different retirement accounts, but IRA is the general one.
So in Australia, it's compulsory. I think it's 7% or 9%. Of your wage goes into this for longer term retirement, and it's working okay so far. But everyone's got their own opinion on that.
Yeah.
So the next thing I wanted to talk about was the Fdic Insurance. So one thing that you've always loved is the fact that you've got that fallback on somewhere like Coinbase. And now Binance US came out and said that they've got that. So do you think this kind of thing, and we hear about custody and BitGo are now insured by Lloyd's of London and these really reputable names, is that something where you're going to say, hey, I'm more comfortable now trading with a larger amount on an exchange? And do you think other high net worth people have got that same thought process?
Absolutely. I know for me, and I can only assume that others are similar in that regard. Unfortunately, right now I'm in one of the 13 states that is not not accessible to Binance US at the moment. Maybe that'll change. I'm certainly keeping an eye on it. So I'm stuck on Coinbase for the time being, I should say. But it is absolutely, that was my fallback to say, okay, I'm comfortable. I mean, humans are creatures of habit, as are all animals. So I'm comfortable. I don't want to change anything. Things are going all right. And now that's just one more step forward to, it's a little nudge, maybe look elsewhere, maybe lower your fees a little bit. And that's definitely going to have my attention if we do see my state allowed to have access to Binance US.
And possibly good for altcoins. I know when we used to talk and Coinbase only had the 3 coins, and I'd say, look at EOS and you can't trade that. But now, if we get in a bull market, that means more trading opportunities, both long and short, for people like yourself.
Oh, absolutely. I will definitely broaden my horizons and trade more coins if they have enough volume on the exchange that I'm on. And the more people that opens access to, the more volume we'll see, the more comfortable us traders will be. And it's all just a slow snowball for building up that user base.
Yeah, but I guess Coinbase have listed just about every coin under the sun. I feel like they're starting to list a few of their VC mates kind of projects, and it's becoming like Wall Street, like the Algorands of the world, these new coins that have showed up, and all of a sudden they're listed on Coinbase, whereas some of these coins had to wait years and build up communities and reputation, and now it's just like, it's becoming a game, and I don't really like that aspect of it.
Oh yeah, there's stuff going on behind the scenes. As I always say, if there's significant money involved, there's manipulation going on. Pretty much just have that be your standard mindset, and it's probably going to be on point.
And final question, Dan. I know a lot of people get into the investing space in gold and silver, crypto, and they are fearful that the market's going to crash. And I think we're both subscribers to that's not a healthy way to live your life in fear, but be prepared and whatnot. But I definitely think that in Australia particularly, they're going to ramp up QE, and we haven't taken on a lot of things that have happened in the US. I think the markets could go far higher in a bubble, and a lot of people are going to be fearful of that crash. Do you think in the US there's still room to take rates to zero and start QE again? Trump gets re-elected, maybe more tax cuts. Do you still think that there's plenty of potential for those markets to charge fire high just as much as everyone wants them to crash?
Yeah, there is. I mean, I have the mindset of I do feel that it's propped up. I do feel it's a house of cards, but I am also well aware that the powers behind the scenes can keep the show running a lot longer than I think they can.
Yeah.
So I'm not going to fight trends. I'm going to be prepared if we lose trends and we see, it's been very easy for me to stay bullish in this market as long as the weekly uptrend's been intact. And that's been the case for 10 months at this point. And so it's kept me from fighting the trend. So we can absolutely see another 100% gain in the market for all I know. And I'm just going to use the price action. And that's the easiest way for me to just keep a level head, to stay unemotional, to, again, like you say, be prepared for every scenario, but be prepared for it to keep going higher.
Yeah, fundamentals and valuations are out the window. It doesn't make sense. We've said this a lot, but I think even the Swiss National Bank is buying up huge amounts of Apple shares. We've seen in Japan it happens. So if there's a 20% correction in the markets, who knows, the Fed or even in Europe, they might just step in and start buying ETFs and shares. And if you're shorting the market on fundamentals, it's going to be pretty frustrating when central banks are printing money out of thin air to prop the market up.
Oh, yeah, we're already seeing the short frustration. There's so many times where I say, man, if I were short right now, I would be so frustrated.
Absolutely. Any final thoughts for people at home? I've really enjoyed that and hope you guys got something out of it as well.
Yeah, just the main takeaway from this video is establish game plans. And again, just for me, if-then scenarios. If the S&P 500 is in a weekly uptrend, I am bullish. If the S&P 500 loses the weekly uptrend, I will enter X, Y, and Z positions.
Awesome. Thanks so much, Dan. It's always great to chat with you.
You too, Alex. Have a good one.
Cheers, guys.